The U.S. government is projected to reach its debt limit today. We're here with local financial advisor Bruce Allen of Bruce G. Allen Investments. Thanks for coming in.
Good morning.
So we are so close to hitting that ceiling. How would that affect the economy?
Yeah, the ceiling itself is $31.38 trillion, and the Secretary of the Treasury, Janet Yellen, has said that we're going to hit that today. The impact is that the U.S. government doesn't bring in enough money to pay all its bills without raising debt. They have to finance the payments. And so the issue is, how are they going to fix this issue? Are they going to raise the debt ceiling so that the government can borrow more to pay all their bills, or are they going to potentially have to not pay certain bills in order to continue to pay the debt on the U.S. government? So it's one of these things that pops up every 2, 3, 4 years. I hope we never talk about it again. I hope it's a done story. But it's gonna be a story for the next, hopefully, short period of time until they get it resolved. But the markets don't like this unsteadiness. And in 2011, the U.S. government lost its AAA rating, and they were downgraded to AA minus, and the markets did not like that. So we're hoping this gets resolved quickly and rapidly, and that it becomes a non-story.
We hope so, but yes. I know that neither side looks like it's really budging right now, so we shall see. Let's talk about the markets. How is the bond market looking so far this year? The bond market had the worst year since 1926, at least the worst year on recorded data. Last year it fell about 13%. This year so far it's up about 2.6%. So the bond market's really rallying. There is concern that the U.S. economy is going into a recession, and very high quality bonds like U.S. Treasuries and municipal bonds have been performing very well in this environment. So we're seeing that the bond market is actually rallying significantly. It's one of the best starts of the year to the bond market that we've had. On the other hand, about stocks, how's that looking?
Stocks have been up and down. The stock market up to about 2 days ago was really rallying. The stock market is up. The S&P 500 is up about 2.4%. The little guys, small stocks and medium-sized stocks, are up in the 5 handle. And then overseas stocks, the EFA index is an overseas index of European, Australian, Far East stocks, is up over 7%. So we've been seeing a pretty robust rally so far. Let's see how we adjust, because the market was down yesterday and the futures are down today. So we'll have to see how the markets are absorbing this news today.
Well, you said so far. We're a couple weeks into the new year now in January. Can we tell anything about the future, what the year looks like?
Well, first off, nobody can ever predict markets in the future. There are some people that say how the first week of January goes and how January goes can help give us a good idea of how the rest of the year goes. That's about 75–80% accurate. So it's better than a coin flip, but it's not perfect. But by the same token, the fact that the markets are doing well, even though we're seeing some negative economic news, that's a good sign, and we'll have to see, and hopefully that'll continue.
Slivers of hope?
Slivers of hope. Lots of hope.
Okay, I like it. Lots of hope. Bruce, thank you so much for coming in.